All right, welcome back, traders. John Caruso here. April 20th. We're doing a quick hitter look on the June S&P 500. So got that up on the chart here. So when I look at this chart, what do I see? I just largely see a big choppy range that we've been experiencing for the duration of this year. We did get as low. We obviously came into the year on some weakness down along 3,800, stopped, reversed, found some support, and we've made our way across the range, and we have just been carving that range out ever since. So on this run here, we did get as high as 42.8, rejected, saw it chop lower, came back up, made a lower high, and a series of lower highs, and then once again, we made our way across the range back towards about 38.40 on the downside. Now, here we are, fast forwarded to today. From March to present day, we've once again made our way across the range back towards that 4,200 level. I believe we've gotten as high as 41.98 on this last run. So now we're starting to experience some more lower highs on the chart over the last couple of days. We got a lot of doji closes here, which is telling me there's a lot of indecision as to whether or not this market wants to puncture through this 4,200 and take out this old high from this previous swing area of 42.8. So to me, when I look at this chart, I see a lot of indecision. I do see a pretty good place and a pretty logical place for this market to begin to fail and move back on the downside. But still, we still do not have any convincing evidence of that happening. Now, if we were to take out 4,100 on the downside, which is these old support levels right here, I think it's game on for a correction that could take us as deep as 4,000 and maybe back towards 39.60. I have that support zone drawn in here. The reason this support zone is here is those are Fibonacci numbers. The 4,009 level, I believe, is the 50% retracement from this trough to this peak, and 39.60 is the 61.8. So I do believe this is an area as good as any to begin to fail and start seeing some rejections. If the market has other plans and wants to forcefully push back above 4,200, it has to do it in convincing fashion. It just can't do what it did over here where it poked above 4,200, rejected, then started to see a series of lower highs develop before another breakdown. It would have to forcefully puncture through 4,200, see multi-day closes above that level for me to think that we're going to make our way to a higher range up towards 4,300. So that's what I'm seeing right now on the chart. We have seen a series of lower highs and lower lows over the last couple of days on the charts. We've got a lot of fundamental news coming up over the next 1 to 2 weeks. Of course, we have mega cap tech that is going to be reporting next week. We're going to see what kind of shape those markets or those companies are in. And then, of course, we're following that up in the beginning of May with the May Fed meeting. So a lot of things coming down the pipe here. You're starting to see a lot of indecision. Starting to see some subtle signs that the market wants to come in a little bit, perhaps test that 4,100 level, bounce one more time, and then perhaps we get another breakdown over here. That remains to be seen. But once again, for me to be convinced that this market's going higher, it has to forcefully take out 4,200 from here. So that is a quick look at the June S&P 500. I'm John Caruso. We'll catch you back here next time.